For the listed sector in particular, I think one obvious thing that the whole market is perceiving is really, really deep discounts to NAV. And I think those are most pervasive in a few sectors like German residential, continental office, UK retail. One thing that's very notable is that they're usually also coupled with very high leverage. So that from one perspective, this is REIT investors, capital markets punishing these REITs for being over-levered, for being excessively risky on a financial risk perspective. From another perspective, and in my capacity as an advisor, we of course also interact with private equity houses, with houses who see these deep discounts potentially not as risk or as something negative, but as an opportunity. So indeed, if you're behind the mega trends, behind the industry fundamentals for the German residential space, or if you see a turnaround potentially in UK retail, or you see an underloved, deeply discounted continental office portfolio, is now potentially the time to agitate for a transaction, a take private, a capital injection, a JV opportunity. And I think if you look at what has happened, that's indeed the trend. You've seen numerous take private transactions. We've had very sophisticated capital, the Brookfields, the Blackstones, the Henderson Parks of the world, take private some of these deeply discounted names at a time when public markets found them not appealing, but private equity, for virtue of their cost of capital, lower cost of capital, better access to capital, and maybe a different perception of value, taking these companies private. One of the questions here today was, what will it take to grow the public universe? I have been asking that question for many moons. I don't know, is the short answer, if these companies will permanently stay in private markets or if there will be a relisting. But if history serves, REIT IPOs and sort of waning and waxing of public market equity capital, it does even that. It wanes and waxes. So when the cost of capital in public markets, when the geopolitical tensions abate, when there is less strain maybe in interest rate and inflation metrics, could we see a re-IPO of these companies potentially in a better structure with lower leverage? Sure, I don't count that out. Another trend, whether these go IPO or not and have a share price in the end, I think many of the large private funds are turning more into permanent capital vehicles. So even if they are private, if you look at the very sophisticated B-REIT or S-REIT, these are private, yes, but these structures are turning more and more REIT-like in their sophistication. So I think there is some migration towards more of a listed ethos.